Eric Muathe, Muathe.com with World Market Analysis for the weekend of January 21st and January 22nd, 2017. Let's take a look at markets. This is how Asian markets closed on Friday. The close of trading as far as European markets are concerned looks like that. Let's take a look at the Americas, the close of Friday's session, and that's how markets closed. Let's take a look at those charts. Let's take a look at the Australian market. We've been talking about this for many weeks, that the weekly chart was showing resistance based on this break going back to 2015 off the highs. The break there brings the market lower. We come here, we try and move above the red line. We were stalled. We get a shallow pullback. Now we've come back late 2016, early 2017. We seem to be pulling back. On the long-term monthly chart is where we see problems developing based on the top side RSI resistance line. As you can see now that the market is down for the month, this is now looking more and more as resistance. That's one layer of resistance. And the other layer of resistance is the back test line. So this was the break in 2015 off the highs there. We extend that same line, and this is where the market seems to be stalling at the beginning of 2017. As long as we are seeing resistance on those two lines, we have to anticipate that the next major swing trade is lower, as long as the market has not broken out above those two resistance lines. If we take a look at the Hong Kong market, let's see where they could be finding a little bit of a problem with a pullback this past week. Resistance here and a break off the highs there. We are coming back to test this over the last 2 weeks. As long as this is resistance, then we have to assume that this is a market that for the most part is probably also gonna find it difficult moving higher. But if it can clear that red line of resistance, then we get a reason to continue higher. On the daily, as far as Hong Kong is concerned, we talked about this break line on the daily RSI off those highs there. We draw a line from there, and this is where the market is doing its best to break out. We've hit this line on 3 occasions. As long as this is resistance, we have to assume that the next swing trade is lower. If the market can clear that red line, then we get a push where the market might actually move higher. But since we are looking at resistance, we have to assume that the market wants to pull back. And if the bulls want the market to clear the current levels here, they would need to take out that previous break line that goes to this high off the highs there. So without a breakout in the RSI, we have to assume then again here another market that seems to be pointing down. Keep in mind on the monthly looks okay. As you can see, the monthly chart, as long as the monthly chart is bouncing back above RSI 50, that's a stable market. So as long as the RSI is above 50 on the monthly, we can say that the market at the very worst is sideways. If we take a look at Japan on the daily, we can see that the daily did find support recently, coming back to, so daily coming back, found support this past week on this RSI lows line. Also, we can see that it did hold here at the 50-day moving average, which is what the bulls needed to do. We can also see that another market that found daily chart support after recent pullback was China. Again, daily chart RSI showing support, and we bounced on that line twice over the last week. So it seems like for the most part we are stuck between the 200-day and the 50-day moving average, which we can say is sideways market. For both of them, if we go back to the Chinese market, on terms of the monthly chart, the risk here is that the monthly chart moves below 50. If it moves below 50, we can start suspecting there is a big down move here. If it stays above 50, then it's a stable to sideways market. Also, we can take a look at the Nikkei, and on the monthly, after finding support on the daily, we can see there's a need to clear the current resistance level if you go back to the break recently. So this break on the monthly chart for the Japanese market brought the market off the highs there. So we draw a line from there, and this is what is being tested. So failure to move above this line on the monthly chart month to month might cause a reason from a technical standpoint why the next major direction might be lower. Keep in mind we've had a nice run since the lows of 2016. So if we cannot move above this layer of resistance on the monthly, then the next major swing trade is going to be to the downside. Keep in mind this monthly risk here can be seen also on many other world markets. For example, take a look at the Nifty. Once it broke below this trend here, off the highs of 2015, it tried to move above that level in 2016 but failed. So that's exactly where we see the Japanese market coming back to that level, somewhere close to that. And of course, if it is rejected like it was rejected here for the Nifty, then we can see the next swing trade is lower. As we've been discussing here, as long as the Nifty is holding above RSI 50, so as long as the RSI is above 50, that means that that's a sideways market at the very worst. We can see here that on the weekly chart, seems like it is coming back and seems to be stalling on this recent break line on the weekly RSI. So this is where it broke down in October, and now we're coming back to test that level somewhere there. As of right now, seems to be where it is stalling. So as long as we see resistance here, and more so if the RSI drops below 50 on the weekly chart, expect a big down week. Keep in mind we had the reverse of that happen recently. When the market moved above 50 here, we had a relatively big up week, about 3% to the upside. So should we move below RSI 50, expect the opposite. On the daily, no surprise that the market is pulling back day to day. The reason being that the market came back to test the break off the highs of September. And so the RSI was being tested. We tried to move above that level throughout the week but failed due to resistance here. So day to day, we can see the market is still showing that this is a problem spot, and without clearing this level, if the market cannot move above this RSI level, we might still see a market that is for the most part either sideways or down. If we take a look at the Nifty, we can see the RSI coming back to test a recent break of November here. This past week we came and tried to move above that uniformity resistance level. And for those who are new to this concept, take a look on my YouTube channel. I go into details about this phenomena, which I call uniformity. Lots of videos help you understand that concept and strategy or setup. If we take a look at the Nifty, BANKNIFTY Daily, you can see the daily chart actually shows this clearly. There was a recent break, RSI break in September off the highs. We've tried to move above this break line or the uniformity line and been stalled a couple of occasions. You can see here resistance for those highs on the daily, uniform activity rejection for the highs here, and here you can see also same thing. So as long as we are seeing resistance on the short-term charts, it suggests that for the most part sideways at best, pull back for the most part is what it seems to be indicating. But I should add that as long as the monthly chart, which is the bigger time frame, as long as the monthly chart is holding above RSI 50, the market still remains for the most part stable. Take a look at the South African market, same type situation. Most of these markets seem to be mirroring each other. A break off the highs here. Actually, we can even draw it off the highs there. So this was a warning break. Ultimately, you try and move above that level and you're rejected. Rejection here and here for the highs there and there. Coming back, trying to move above that red line. Seems to be rejection. But keep in mind, we are trading between the 50-day moving average and the 200-day moving average. So that suggests sideways action. On the weekly, as far as the South African market is concerned, again, same analysis as we saw with other markets, the weekly chart. Additionally, on the weekly for the South African market, we can see this break point. Brought the market off the highs of September. Draw a line from there. As of right now, we are stalling on that line. So lots of issues here as far as the weekly charts are concerned. Then again, if you take a look at the monthly chart, we see a monthly chart that is bouncing back above RSI 50. That's a stable market to bullish. The last time we held RSI 50 was here, and you can see the market went on a multi-month move higher. So as long as the monthly, and we've seen this in the Nifty, the BANKNIFTY, and other markets, as long as they are bouncing back above RSI 50, give them the benefit of the doubt to at least be sideways at worst. Take a look at the Euro Next 100, and here we can see same type analysis on monthly charts. This was the break of the highs of 2015 here, and we can see that if we take that information, draw a line, that we've been rejected on that line before here for the highs right there. And now if this is confirmed as resistance, then we can see that these are serious highs around current levels. Now that's the Euronext 100 index. Take a look at the French market. And again, similar analysis. This is why I've been saying that if markets stall around here, we might be looking at a situation where we see a major drop, if not bear markets across the globe. A break of that trend line brought the French market off the highs there. We draw a line, which is the uniformity line. And we've been rejected here before, which is the highs of late 2015. And now we are coming to test that level. That's a serious level. If we cannot move above that, we might be looking at a serious reversal and a move lower for most markets. Let's take a look at the German market by way of the DAX. The DAX also coming back to test the break, trendline break here. Brought the market off the highs of 2015. We draw a line from there. You can see that if this is confirmed as resistance, that's a problem. Take a look at the FTSE. And the FTSE also has two lines actually that we've discussed previously. Topside resistance coming in play, right? So if we cannot move above that blue line, that becomes a problem long term. And we can see that there was a break here. Let's draw that break right there. Trendline break recently that brought the market off the highs here. We had a sizable drop, which is this drop here. And so we can see that the market needs to be above that line if it is to do well. So until markets can confirm that they've cleared those two lines, chances are confirmation of resistance at current levels suggests that the next major direction might actually be lower. Sticking with monthly charts, take a look at the Canadian market on the monthly chart, and we can see that it is doing its best to break out above the all-time monthly closing high. So let's keep watching that. The level to watch there is a breakout above 15625.73. So until we see a convincing breakout, I think we can also a little bit be suspicious that it can hold above this level. And the reason for that is this backtest line that is coming in play. I would draw it somewhere like there. It's the same line that we broke below. Once we broke below that line, markets dropped here off the highs there. And right now we are seeing it being tested again. So the back test, if it fails here, chances are the next major swing trade is going to be lower. Keep in mind, bulls want to see the market move above this number. Otherwise, failure to move above that would suggest markets running out of momentum. Keep in mind, we've had a nice run moving from about 11,500 in early 2016 to the current highs. That's a big percentage move. So if we cannot move above this price range, chances are we might struggle. We take a look at a similar situation. The Brazilian market might need to break out above the recent monthly closing high. The level there is 64924.52. So if it can break out, great. But keep in mind, this has been a problem and was a problem last year as the market tried to move higher. Why? Because essentially what is happening is we are trying to move above this line, which was a problem, has been a problem since the break here, this warning break. Market's been unable to move above that RSI level ever since. So draw a line from there. You can see that we came close on a couple of occasions but failed. You got resistance here for those highs. You tagged it here for the highs here. You kissed that in 2016 and stalled, which is the high there. And so you're coming back in early 2017. If you can't move above this price range, if you can't clear this blue line, then chances are the next major direction is probably for a pullback. Otherwise, market bulls would like the market to move above the price high of 2016. We also need to move above the blue line if the market is to record higher price levels. Otherwise, for subscribers, I've already sent you guys part 1 of this weekend's market analysis video that included stock picks and my analysis for the week on commodities. Otherwise, for the rest of you guys, enjoy the rest of your weekend. I'll keep you guys posted. Good luck, peace, and blessings. E-A-C-S.